Patrick 你好.
你好.
Would you just introduce yourself to our audiences?
Hi, everyone. This is Patrick Wu from Agricole Corporate and Investment Bank. So I'm managing the FX and emerging markets trading for the bank in Asia. Thank you.
So the first question is that it's about the latest COVID-19 outbreak. Would you tell us about it and its impacts on emerging market Asia, including South Korea?
Well, the latest COVID-19 situation is actually very extreme for the developed market and the emerging markets, because we are seeing some of the emerging markets, right? The situation has been improved massively, but for some of the developed countries, the situation remains very, very serious. By looking at the data, right? If you look at the Asian countries like South Korea, Japan, China, the death per capita, so it goes to almost zero, which means that, per 100,000 of people, the death rate is less than 1 people. But for some of the developed countries like Belgium, UK, Spain, this number remains very high. So the death rate remains close to 1%. So its impact to the global markets and emerging markets were very huge, especially before Q2. You can see the impact on GDP, the impact on industrial production, manufacturing, employment. Those are massive. But we are seeing selective rebound after Q2 for various emerging markets countries like South Korea.
What are economic impacts of this health crisis? Would you just explain with more details and the policymakers' responses?
Yeah. So basically, the impact is hitting different aspects of different economies. For example, the PMI for various Asian countries, right? We have seen at one stage, the PMI for some of the countries, it went to low 20s. So that's very bad, because it shows that the slowdown of the manufacturing activities in those economies. And in June and July, we start to see some of the countries, the numbers are catching up. Let's say Korea is going back to almost 50. And for Indonesia, for Taiwan, for India, it all went beyond 50. So, and for GDP, the impact was very, very negative, because if we look at the data, right, for Q2, the Korea GDP impact was also massive, minus 2.9%, and Taiwan was minus 0.58%. So it's basically minus for all the country. We are foreseeing a strong rebound in year 2021, not likely to be this year. And CPI is well under control right now because the economy's activities are slowing down, consumptions are slowing down. In general, we remain at a positive region, and we see the sign of rebounding inflation, but actually the magnitude remains very small at this moment.
What about the policy measures of the Asian countries' economies?
Well, there are coordinated efforts, among different governments and central banks regarding how to help with the situation. I think there are two very important policies that they are introducing to help with the situation, the monetary policy as well as the fiscal policy. So as you can see within the Asia region, right? So most of central banks, they have cut interest rate to help with the lendings in the economy. So in Korea, Bank of Korea cut 75 basis points from March to May, and India cut 115 basis points. And in Indonesia, Bank of Indonesia cut 100 basis points. Even CBC Taiwan cut 25, and Chinese Central Bank PBOC, they cut 30 basis points on the loan prime rate. So this is quite consistent regarding the monetary policy reaction from various central banks. And at the same time, we have been seeing different governments. They are trying to help with the local economies. They are trying to help with the employment. They try to expand the official budget. So we can see the official stimulus package among different Asia countries has been growing tremendously. So for, let's say, Korea, they introduced the stimulus, which is up to 14% of the whole GDP. Even for India, right, is up to almost 12%. So the scale of the government support fiscal expansion is massive in Asian country, not even to mention about the other developed countries.
What's your view on the EM currency markets? Maybe the short-term trend to the longer-term trend?
Well, regarding the currency market, right, the situation is more complicated than the monetary policy and the fiscal expansion itself, because now there are many factors driving the emerging market currency. The first factor is regarding the US dollar, performance. So we have seen after March, the US dollar index has been trading lower from 103 to 93. So basically, the dollar index depreciated by almost 10%. So in the second quarter, I think the global investors, the traders, the portfolio managers, they still have concern that emerging market Asia, they are suffering at a similar magnitude as the developed countries. So honestly, a lot of Asian currency, they didn't outperform the index before Q2. But after Q2, we have seen, dollar Taiwan, dollar China, dollar Korea, they're taking the lead to appreciate against the other currency pairs. So let's say we have seen dollar won trading at 1280 at one stage, and it was traded at 1160 this week. And dollar China, dollar CNH touched 7.2 with the concern of the trade war and with the concern of the spread of the coronavirus. And right now, dollar China is trading at 6.72. So you can see the change was massive, partly because US dollar was underperforming after Q2, and at the same time because the Asian economies and the governments, they control the COVID situation much better than the developed country, and that's why we are seeing different investors coming back to Asia to buy back the Asian assets as well as the currency, which it drove the outperformance of the Asian currency, especially in quarter three. So I see the leading currency pair would be dollar won as well as dollar China.
So you mentioned the asset markets. So would you tell the audience about the bond market, especially the KTB market?
Yeah. So I think let's talk about the Asian bond market as a whole. I don't think this year 2020 is a year for Asian bond markets, especially the local currency bond market. The reason is, if you look at the assets performance of the US market, right, obviously the global investors, they are very keen to build a position on developed market equities, especially the US equity. And because of the aggressive monetary policy introduced by Federal Reserve, we have seen massive amount of flow going into US dollar denominated bonds, including investment grade bonds. So for emerging markets, why is underperforming versus the DM assets, even the situation is better, is because right now they are still the investor, the bond portfolio managers, they are still not quite confirmed regarding the currency outlook, the whole situation. So we see the situation is actually, the investor appetite has been picking up in Q3, as I mentioned before, because dollar won, dollar China, we can see they are moving lower. So we see a stronger currency, and the currency are actually outperforming the trade basket peers. And that's why when the investor, they evaluate the whole situation as well as the volatility in the EM country, right? They start to pick up the EM currency bond. So right now, the main driver, if you look at the China bond, right, before August, there was $80 billion of inflow into China onshore government bond. In September, because of the FTSE Russell bond index inclusion, there was additional $20 billion of inflow. So in total, it's close to $100 billion inflow. Going to Korea, I think KTB is something the global investors, they always like to load up because of the development of the Korea capital markets. They love it. And this year, the purchase, the interest slowed down in Q1 because when there was a crisis, right, the global investors, they will have concern on US dollar funding level. But, it proved to us that actually the Korean capital markets is much stronger than what the global investor they can imagine. So dollar funding was very stable. Dollar won, recover from all the losers. And that's why, we are seeing the investors slowly coming back to Asia market, especially on the KDB bond market. So right now, I would say the emerging market, Asia emerging market bonds, they are very attractive. So right now, let's say for Korea 10-year KDB is trading 75 basis points higher than Treasury bonds. And with stable currency outlook, I'm pretty sure that next year, those investors, they will come back to buy emerging market Asia bonds, KDB, CGB, and some of the other government bonds in the region.
Thank you. Then what are the key concerns that we should be worried of the post-COVID normal then?
Well, there are a few factors that we have to pay attention. First of all, the COVID-19 situation is not quite stable because we are seeing rebounding cases in some of the developed markets. So whether there will be a second wave or maybe we call it the third wave of rebound, this is something that we have to observe. And the investor, they are always evaluating how effective the monetary policy and the fiscal policy deployed by various local central banks. So whether those policies are helping the local economies to recover. So those will be important factors for investors to judge whether they should deploy capital into different local capital markets. Furthermore, we should look closely on the geopolitical issue, whether there will be escalating tensions among different jurisdictions. So those are factors that they are talking about nowadays. And there's one more thing, because after COVID-19, right, they are concerned deglobalization will replace the globalization trend. So if this is happening, which means that all the economies and all the jurisdictions, they will try to move the supply chain back to their own country, which may push up the inflation in some of the local markets. So those are important factors for us to watch.
Thank you, sir. So the last question is, would you explain the post-COVID economic outlook of emerging market Asia? Would you you told us about it, but would you just summarize it briefly?
Well, actually, we are relatively optimistic about the recovery of the emerging market Asia economy. The reason is because I think in general, the Asian governments and central banks, they are doing a very good job. The government, they managed to control the spread of the COVID and to control the growth case in the region, which provide a fundamental for the economy to rebound. And the fiscal policy, right, when they try to deploy the fiscal policy, is very timely. So it's helping a lot of local corporations and financial institutions, to stabilize and not to get themselves into trouble. So we foresee in year 2021, for most of Asian countries, right, we foresee the GDP rebound will be quite significant. For example, for China, right, we foresee year 2021, there will be an 8% rebound on GDP. And for India, we are foreseeing a similar number. And for Korea, our number projection is 3.8%, which I think is quite significant and to differentiate Asian countries from the developed country peers.
Thank you so much for your presentation. The question prepared is, do you have any last words for Korean audiences?
If I have to say something, right, I think for Credit Agricole CIB, we are very committed to the Korean market. And that's why we are still growing our business in Seoul, in Korea. And we are very determined to support the local corporates and the local financial institutions for them to grow and to expand in the region.
谢谢 谢谢。
Thank you.